And I think your listeners might fall off their chairs or hit the brakes if they're driving and listening to this. If I tell them like my interest rate on that mortgage was a double-digit one, my first one.
You're listening to the Just Start Real Estate Podcast. If you're serious about your real estate investing business and need real answers, you are in the right place. And now, your host, Mike Simmons.
Hey, thank you for joining me today. I appreciate your time. I appreciate your attention. And I've got a good one for you. I'm a little biased. I've said that in the past. I think all of the shows I bring you are fantastic because, frankly, I wouldn't upload them and present them to you if they weren't. So today is no exception. I have on the show today someone who is very, very good at accelerating wealth, at taking the assets and whatever you have at your disposal and making it work much, much harder for you. His name is MC Laubscher. He is the creator and host of the popular podcast Cashflow Ninja and also Cashflow Investing Secrets. He is an investor himself, a serial entrepreneur. He's the president and chief executive officer at Producers Wealth, a virtual wealth creation firm that assists investors and business owners to set up and implement infinite banking. He has shared his strategies in Forbes Magazine, Entrepreneur Magazine, Cardone TV, and the BiggerPockets podcast. He's been all over. People seek him out, and I have him for you today on the show, and I could not be happier. So without any further ado, I give you MC Laubscher. All right, MC, I appreciate you doing this, man. I appreciate your time. Thanks for being here, and thanks for being part of this podcast.
Thank you so much for having me. Excited to be here.
Yeah, for sure. I am too. I was able to be interviewed on your podcast several months back now, and I'm happy and excited to have you on mine because I know you have a lot of great stuff to share. You're doing a lot of great stuff. You're helping a lot of people, and I just think that's awesome, and I want to dive into all that. But let's give people a little bit of context here. Tell us a little bit about your background. Where do you come from? Why are you even in real estate? Like, what were you planning? And maybe this was always your goal, but before it was your goal, if it wasn't your goal from the beginning, what were you going to be before you became this?
That's quite incredible. So yeah, what a journey. Originally from South Africa. So I'm originally from South Africa. I grew up in a very interesting time during South Africa's history. One of the things that I learned during that time specifically was to think for yourself, critically analyze things, ask questions, see the different sides and angles of different things, knowing that there's different perspectives and then overlapping things. So one of the things that I learned is I was a major in history and economics, but it wasn't until I understood the financial history of the world, that it actually all started to make sense because it kind of overlaps, right?
Yeah.
So if you use those frameworks of bringing it together, you start to see what's going on. And I started my journey playing sports, and that's how I ended up in the United States. And I read a lot while traveling sports. At that stage, guys we were traveling from city to city, playing in a national league, and guys would play video games and do this and that. I started reading, and I love reading books. And I came across a book that my mom actually gave me on one of my visits to South Africa, Rich Dad Poor Dad. And obviously, your listeners might be very well familiar with Robert Kiyosaki's Rich Dad Poor Dad. I read the book, really changed my paradigm. It was a huge paradigm shift in my thinking. I took action. I bought my first property. This was 2001, and got my first tenants in, collected the rent, paid all of my bills, and at the end of the month, there was cash flow. There was extra money available. And I'm like, this is incredible. like, how many times can I do this? How many properties can I buy? How many doors can I get? And that's kind of where the journey started. And then there's a couple of other things that through aha moments, big light bulb moments that I had brought other things together. The first one was cash flow. And real estate cash flow was amazing, and learning about that. Deep diving into the financial world, learning more about economics, history, and financial stuff brings you to the banking system.
Yeah.
You just end up looking at banks. That's just how it happens when you start looking at these things. And then you start to realize, man, there is a business model here that is unmatched. because these are the creators of the game, and they own the chessboard.
Yeah.
Everyone else is moving pieces on it. And I had that epiphany, and then I reread Rich Dad Poor Dad, and I'm like, wow, this is an accounting book. But not only was it the focus on creating assets that produce income, but also sharing, kind of deep into the book that you have to be the bank. Essentially you have to be, and you have to become your own banker. So that was the second kind of pivotal moment on my journey, is cash flow, being the bank. And then I looked at this and I said, wow, this, if you're focusing on cash flow, you're the bank. What other things are there parts of the game that I need to learn about? Yeah. And being a real estate investor, you're obviously going to end up with debt. Yeah. You're going to end up. That's a big part of the game, is leveraging debt and good debt. And another part of the game is leveraging the tax code, which is also that. And then leveraging inflation. And a lot of folks suffer because of those three things, right. Where if you're on the other side of this compound interest equation, because you figured out cash flow in the banking system, you can leverage that to actually grow and scale your investments. So you grow and scale your real estate portfolio, your investments, and so forth, because you know how to handle debt, leverage it, you know how to handle inflation, and the tax game. And that's kind of what I learned on my journey. And fast forward to today, we built a platform sharing all of these many things that we learned. We have a platform called Cashflow Ninja, which is an education company, over 700 podcasts, different programs, and so forth, with listeners and students in over 180 countries around the world. And then I also have a company in the United States where we teach a lot about and help folks with wealth strategies and how to utilize strategies to become their own banker. That company's called Producers Wealth, and we started that in 2015.
Gotcha. Okay. Now we have raced through the years here and kind of gotten from the beginning to the end really, really fast. Now I want to go back and dig in a little bit to the beginning. I know if you're like every other human on earth, there is a certain amount, and I like to talk about this because it's real and it's real life. There's a certain amount of discussion you have to have, at the very least with yourself, when you decide you're going to buy your first rental property. It's a big decision, and it can be very, very scary. And I don't know at the time if you were or are married, or if you had anybody else in your life that you had to bring aboard on this journey. How did you do that? Because I think for most people, they can hear everything you're saying and they'll go, that makes total sense. And I'm excited and I'm enthusiastic and I'm inspired by MC. I like what he's talking about, but my wife will never go for it, or my husband will never go for it. Or, my parents have told me I'm an idiot since I was born. I'm never going to be able to convince anyone that they should think that I can do this. Like, what did you have to go through in the beginning stages just to get to the point where you could take action?
You have to change your belief systems and your beliefs. Otherwise, nothing will change. And you can put this into other areas of your life. You could put this in areas of health, your marriage, or relationships, and your wealth. Nothing is going to happen until you change the lens through which you view the world. And if you're married, you have to bring that partner and spouse with you on that journey. Otherwise, it's going to be very, very tough. It's going to be a very tough relationship, right? Even with business partners, if you're not viewing the world through the same lens and you're not on the same page, it's very, very tough. But I think, I mentioned that I grew up in South Africa in a very interesting time in the country's history, which led me to become a person that questions everything, do my own research, critically analyze and think everything. I think that regardless of where you grow up, you have to kind of have the same approach, because we have to be cognizant that we are born. And since we are born, whether we know it or not, we are being indoctrinated, saying this nicely. It's not necessarily all bad, but we're being indoctrinated, and there's certain beliefs and belief systems installed within us. And it's not necessarily what people tell you, but it's what you observe. Mm-hmm. So I grew up in a middle-class family in South Africa. I had a lot of poor beliefs, belief systems because my parents, didn't come from money. Their parents didn't come from money. Yeah. So those kind of behaviors then you pick up as a child, and it's the same thing. So the only reason why I took action, take reading that book, diving into that, but I had to change the lens through which I see the world, and I had to change my belief system. And by the way, it's the hardest thing to do, because we've seen it. If somebody attacks some of your core beliefs, we're automatically defensive. We feel, a lot of folks feel, that somebody's personally attacking you or offending you just if you do that. So the hardest thing to do is to change it yourself, to realize that, hey, I did grow up here, but there's a different world out there. There's a different I would say universe that folks can operate in. So that's the big thing. And if you're married, I wasn't at the time. I was young, just starting out. This was 20 years ago, and I'm 42 now. So I was young, started very, very young. So I didn't have a mortgage, a job, all that kind of stuff, a family to support. But I think it's very important. Even now, there's still a lot of big changes that I continue to make. And I do have a wife, and I have children, and I have several businesses and so forth, but you have to be on the same page.
Did your parents agree with what you were doing? Did you talk to them about it?
No.
Yeah.
Everybody, that's kind of been the story of over the past 20 years, is everybody's thought that I've been crazy for 20 years. And, it's funny that in 2020, a lot of folks have reached out to me as friends and family. And all of a sudden, they started to see like some of the things that I was talking about playing out. Yeah. So no, everybody thought I was completely nuts. Yeah. So you got to get around other crazy people, because, was it Steve Jobs that mentioned it's the crazy ones that end up changing the world and changing their lives and the lives of their families and their communities, right?
Totally, man. You bring up a good point. You kind of said it casually there, but I think what you're essentially saying is some sort of a group, mastermind, or a peer group or something where people think like you think, because the crazy thing is if you surround yourself with people who think a certain way, you tend to think that way for the better or the worse, right? If you surround yourself with negative people who constantly blaming everybody else and woe is me, and they never have any, like you can feel you're starting to slip down that road. If you surround yourself with people who think they can do things, or have, the crazy people, the people who have these ideas that change the world, you start thinking that way too, right? So it's like, to me, it's a lot like peer pressure, right? Peer pressure, when people say the word peer pressure, it's always kind of a negative, like, oh, kids have peer pressure to smoke or do drugs or whatever it is. But peer pressure isn't good or bad. It's just a thing. If your peers are good people with good motives and they're trying to be more with their lives and have more and be more and do more, that's peer pressure, right? So you want to surround yourself with those kind of people. I think that's awesome. You're right. There is a certain power to being young and maybe naive and not having those mortgages and wife or husband or whatever to like make you have to second guess yourself a little bit. So that's very good. But on the flip side, I think sometimes when you're young, you struggle with, does anybody take me seriously? I'm very young. Like, I've never done anything. Like, I don't have any experience to, fall back on. So I think there's a lot of it takes bravery, a little bit of courage to go out as a young person and do it. It takes bravery when you're with a mortgage and a wife and a husband and all this responsibility. So thanks for sharing that. I appreciate it. So when you bought that first house, let's stay there for a minute. You bought that first property. How did you find it? How did you finance it? How did you find tenants?
This was actually in South Africa. So I was in the United States, and I went back to South Africa for a couple of months, and I bought a property there. So I knew that I knew the market very well. I grew up in the area that I actually bought the place, and I kind of know where the market was going. So I kind of saw the development, and so I grew up in Stellenbosch in South Africa. The closest major city is Cape Town. Okay. And I had family that lived in this particular area. You would call it a suburb of Cape Town. And I kind of saw a lot was moving in that direction, where it was a very simple commute into the city from there. So there was a lot of working people moving into that area. It's beautiful. It's close to the beach. There's great surf there. So not only is it a phenomenal lifestyle, but you can get to the city to commute and work pretty easily. So then I kind of knew where I wanted to to buy. And I went to go and stay there for about a month. I lived there, looked at all the different places, found a realtor after interviewing some folks. And again, to your point, I was young at that stage. With the first couple of realtors that actually met with me, like looking at me like, who's this young kid in like shorts and, flip flops and a t-shirt that looked like he just, went for a surf basically. It was something to overcome. But once they realized that I started, that I was serious, that I got basically pre-approved for a loan at that stage for financing, they started to see like, hey, this guy is serious to get a property. So I found a property that I liked. It was a great rental. It was a condo, and I'll never forget it because it was a great lesson and a starting point. So it was a 2-bedroom, 2-bath, a couple of blocks from the ocean, great view, very close to commute for people to commute in. And that, just taking the leap there and eventually buying that with financing, and I think your listeners might fall off their chairs or hit the brakes if they're driving and listening to this. If I tell them like my interest rate on that mortgage was a double-digit one, my first one, and it was still able to work. That after paying all of the expenses associated with that condo, the association fees, the mortgage, putting in some reserves, it was cash flowing. Yeah. So you hear a lot of folks say, I can't cash flow anything with a mortgage at 5 or 6%. Like, what are you talking about? I'm like, well, this was double digits that I started, and I found the property. So you can find deals like that. And so tenants, I also enlisted the help of the broker because there was a lot of different screening things that I didn't have the experience doing. I didn't know what I didn't know. Sure. And looking back, that was actually a smart move of just enlisting help of someone that knew what they were doing. So I got an agent to help me find those tenants where I had previous experiences where I tried that on my own, and even the due diligence that I did, it didn't work out so well later on. So even being young, there was some blind luck involved with it too. But I think the important thing about that, and here's a lesson for your listeners, is sometimes with everything that I've basically learned over the past 2 decades, you can read about driving a car a lot. You can look at all the pictures of what a car looks like inside. But at some stage, you're going to have to get in that car and learn actually how to drive. And we learn by driving it. And it's with a lot of other businesses and niches that I'm involved in. You have to get in the car and learn how to drive. And I think that was the big lesson out of that. And you mentioned the word courage. With everything, it takes courage. Every major decision that you make, and especially when it comes to investing and especially changing your life, it takes a massive amount of courage.
Yeah, for sure. And not only that, you don't, I'm assuming you're doing this now and not in your home country. You're in a completely different place from where you grew up. And so that adds a layer of complexity and maybe a little bit of extra courage. I don't know. Or maybe it's, sometimes I think we grow up here in America. We live in a, middle class. It's comfortable. And like nothing has exercised that muscle that helps us deal with risk, of any kind. We're constantly kind of coddled by the parents, and so there's no real risk muscle being developed. And sometimes maybe when people come from another country, it's like, well, it's already pretty crazy. What's the difference if I start doing this, right? Like it's just, I'm all in at this point. But it always amazes me, people who make excuses, who grew up here and have every opportunity in the world and have struggles and excuses. And then somebody comes from another country, doesn't know, how we do things here, how you can finance things or how things work. And they somehow manage to do it. I think sometimes it's just like, I don't know, it's risk. I think it's risk tolerance or something. People are afraid to make mistakes, afraid to risk what they have, even though what they have isn't what they want. It's sort of a crazy mindset, but I think that's what happens sometimes. So, cool. So You talk a lot about, and you mentioned it a few minutes ago, becoming the bank. The bank made the rules. The bank created the game. We're all just moving pieces around. So for someone listening right now who's working that corporate job or whatever, going to work on the assembly line, whatever it is, like, what does that even mean? How do they get their mind wrapped around being a bank when they don't have any money really right now, or they're struggling, or maybe they bought their first investment property, but it's like, what does he mean, be the bank? What does that mean?
Yeah, no, that's a great question. And I just, one point on your previous comment about risk, that people, the risk tolerance of people. I have to say, as a foreigner coming to the United States, when I first came here, I was just blown away with the opportunity for upward mobility in the United States. And this was in 2001 that I came here, and now it's global because we're also connected on the internet. I came here and I was like, this is insane. The opportunity, this is in most countries, and I traveled a little bit of Europe and grew up in Africa, and I've been to Asia, but most countries, there's not this upward mobility where anyone, you name it, whether it's a Sarah Blakely that starts Spanx, basically, whether it's a Damon John that, starts in basically the projects in New York City and ends up becoming a billionaire. There's the opportunity is just incredible. And how you see it is to just shake the victim mentality, realize the opportunity and capitalize it. But bringing it back to the banking model, bankers, the banking model is just phenomenal. If you break it down very, very simple, on the one side, you have a lot of people making deposits into a bank. We still do it. We used to get a return on our money, but there's still online banking. There's still other features, wires, and so forth. There's still things that we use banks for. This is going to completely, the next 5 years is going to be incredible. All that's going to change. But for now, we still use a lot of the deposit sides of banking. But on the back end of the banking system is a lending side. And that's where the money is made. Banks get their deposits in. They have a very, very low cost of capital, which business owners and investors should always be cognizant about. And on the back end, they then create assets, which is loans, whether it be auto loans, mortgages, business loans, student loans, credit cards, you name it, they create that on the back end and then make a very, very nice spread. So nice. So if I can, if you just look at examples of what folk, here's a quick example. Let's just say we put $10,000 into a bank, and they pay us, 1% on that, which is very generous. But on the back end, they take that $10,000 and they lend it out at 10%, which is also generous because we know some credit cards are 24, 25, 26%. So you could see that on the front end, they're paying out 100 on the back end, they're making 1,000. So most folks would say that's a nice spread, 9% spread, right? But the only money that the bank had in that transaction was the $100 that they paid on the 10,000, someone else's money, their cost of capital. They acquired the capital at 1%, $100, and they lend it out on the back end, and they made $900. So that's a very, very nice spread. It's not 9%. It turns out to be 900 if you look at the profit that they're making. So this doesn't even take into fact the fractional reserve banking. So how do folks use similar things? The first, the model that we use is essentially, there's 5 pillars really of an overall wealth strategy, a framework that we use. You have to make your money. We all make our money somewhere. We have a skill that we provide value to the marketplace in which we get paid for. Then we've got to position our capital somewhere. Make money, position it somewhere. Then we have to deploy it to go make more money. That's why we love real estate. Then there's also some growth opportunities or places that we put money for growth. And then we have to protect all of this through tax strategy, asset protection, and estate planning. So being a bank puts where you put your capital at the center of it. So we talk a lot about there's different ways, and especially in a very, very rapidly changing world right now where there's going to be so many things coming simultaneously at folks, which they don't know where to look. Where do you position capital? So cash is always king in times of recessions and corrections, in times of uncertainty. Gold and silver is a good one, and then also cryptocurrencies such as Bitcoin, which has now become more acceptable, is a good way to put it. Those are just three assets that I named. But essentially, what a banker can do and what banks do really well is they collateralize assets which they already have, meaning having one piece of the pie or a pool of capital do many different things simultaneously. So what if, for example, I'll just share this. A mentor of mine, this is 20 years ago, this is what they did. In the 70s, they would go to the bank and deposit money into CDs, believe it or not, because it was paying double digits.
Yeah.
And what they would do is they would go to the bank and say, hey, Mr. Banker, can I put $100,000 CD in a CD in your bank? And the banker would say, well, of course, cost of capital. They take it in, they put the money there. Then they would go back to that same banker and say, hey, Mr. Banker, I've got $100,000 in a CD that's locked up in your bank. Can I get a loan secured by that $100,000 in the bank? And the banker would say, well, of course, we got your capital in, low cost of capital. We're now going to create a product for you, a loan that's secured by this. So we have collateral too, and they would give them up to 90%, let's just say, of the value of their CD in the shape of a loan. They would then take that $90,000 and go buy real estate. Financed it with that, and the cash flow from the real estate they would take to pay the loan back to the banker. That $100,000, if you think about it, just did many different things simultaneously. And that's how folks can think strategically of how to become their own banker. Yes, you have to build up reserves and savings first in a place. That's the first thing that folks should do. We always say, get 6 to 12 months of reserves, cash reserves somewhere.
Yeah.
And then you look at other places to put capital. But then the more important thing is position assets so that you can eventually collateralize it. So the strategies that we use is infinite banking, where you use actually an overfunded dividend-paying whole life insurance policy with a mutual insurance company. Yep. So you build up cash value in the policy, you borrow against it, just as I explained. The money grows tax-free in the policy. There's guarantees. The dividends are tax-free, and then the death benefit goes tax-free to your beneficiaries. Yep. It's a very powerful strategy that they implement and execute in family offices. You can use gold and silver, where you can borrow up to 50% of the value of your gold holdings, which is a pretty powerful strategy. So a lot of folks would say, I don't want to invest in real estate because the world's coming to an end, so I buy gold and silver. Well, Mr. or Mrs. World coming to an end, you can also buy another hard asset with your gold and silver using it as collateral. The same with maybe someone that's saying, well, I don't want to miss out on this Bitcoin wave. Well, there's now custodians actually of Bitcoin that will lend up to 50% of the value. Obviously, a very risky strategy because it's a volatile clause.
Yeah.
But to 50% of that to go and then buy real estate with it. So that's what I mean by becoming a bank as far as a wealth strategy, because I think why real estate investors and business owners are so successful sometimes is because they have tunnel vision and they're focused, laser focused on generating assets that cash flow. But sometimes if they look at just a couple of moving pieces around that, it's going to amplify what they're able to do as investors and as business owners.
So would you say, this is kind of an abstract question, but I thought of it as you were talking. Would you say that you would attribute your financial success more to those kind of strategies where you're collateralizing a hard asset to really do multiple things with the same amount of money? Or would you attribute it more to literally just the purchase of real estate? You know what I mean? Like I'm almost thinking like if I took away all of the strategies you just talked about, you're not collateralizing, you're not making this work. You're just buying houses, renting them, renting them. That will get you to a point, right?
Yes.
It's almost like you've added some gasoline to this little fire that's made it explode. And I don't want to put words in your mouth, but it feels almost like you're saying these infinite banking strategies, these other strategies you're talking about, actually take something that's pretty good and make it 10 times better. Is that fair?
That's fair. And that happened to me personally because I was building and I was slowly but surely building a portfolio. And once I started doing these strategies, it just started putting rocket fuel on what I was already doing. And I see it with folks in our network too. Here's another strategy, same thing, collateralizing. And most folks are probably familiar with this, but essentially, we have a business owner where you can collateralize the assets of the business, the receivables and the assets that they have, to go to the bank to get a business loan. So we had someone in our network had a business that operated from a specific building. They got a loan collateralizing the assets and purchased the building with other tenants in it. Now they have additional income, and basically the rent is paid for the building from which the business operates, and it still does.
Yeah.
And the simplest form of this, I use the CD as an example, but most folks know of a HELOC, which is essentially the same thing, a cash out refi and a HELOC, because you didn't have to sell the real estate with tax consequences and all of the other things to access capital to roll it into a next property. Yep. So it's looking at these other strategies available around it, which could really put some rocket fuel on what you're doing.
Yep, absolutely. Can I ask you, when you said you were building your portfolio, kind of slowly putting it together, what was the first move you made in this direction of collateralizing and kind of multiple use for this money? What was the first application? How did you kind of get into that part of it? And the reason I'm asking is, the strategy you're talking about makes total sense, and I think people listening can make sense of it. But I think most people's questions is always, okay, I have 5 rentals, I have 10 rentals. What do I do first? What should I do first in that case?
It's a great question. I was running into the challenge of you would get one property and you try to get, maybe 2 or 3. And then all of a sudden now you're shooting for 4 or 5, right? Mm-hmm. But what happens is, there's 1 or 2 tenants don't pay, dealing with evictions. Yeah. And as all the real estate investors know, shocker, folks can damage properties, which they do. They have in my journey. On my journey, they have. So then all of a sudden, and this happened to me, all of a sudden you're like, man, now I have to fork out credit cards again because I have to cover some rent. Yeah. I have to basically fix, spend $5,000 to $10,000 fixing a property, which folks damage, and now I'm back in a hole. Yep. So it was until I started to implement the infinite banking, which is actually the insurance strategy, where I sat down and I said, okay, I need to build up reserves. I can't continue to operate like this because I feel like I have momentum and I'm adding to a portfolio and I'm growing, and then I take 3 or 4 steps forward, and now I'm taking 5 steps back again, basically. Yep. So essentially building up the reserves in a place where I can access it to. Once I had that set up, and 6 to 12 months of reserves, it's hard. It's painful for real estate investors, especially if they have a portfolio, because they're always just looking at, all right, I need to make this money work for me. I'm getting nervous just looking at it sit there. Mm-hmm. It was painful, but once I got there, and I also, since then, I've always maintained 6 to 12 months of reserves minimum. But once I did that, all of a sudden, I had a foundational piece underneath me, and now I could take the next step up and really start to scale things that I was involved in.
Yeah, I love that. I love that, man. That's awesome. So that's some of the strategies that you did to kind of build your business. What does your business look like today? I know you said you have multiple businesses, but what is it that you're focused on today? What are you excited about going forward? And real quick, I feel bad. I'm a horrible interviewer by doing this, but you said something earlier, just in passing, and I want to just touch on that before we move forward. You said that you don't think the banking system as we know it will exist in 5 years, or there's going to be some major difference. What do you mean by that? What do you think is going to be happening?
I think there's industries that's ripe for disruption, ripe for it. Real estate obviously being one of them too. But the banking system is still very archaic in a sense. And I see a lot of up and coming technologies, especially in the crypto space, that is going to challenge the existing system, the banking system. And they're going to come to, they're going to come to a fork in the road where they have to embrace a lot of it, which some banks already are starting to do, become becoming custodians for other assets to hold it. And, so banking might be a little bit different. My son is 4 years old. I don't think he'll ever be in a bank, have to go into a bank in his life. I think that's just all going to be online. I think the way that banks are structured and set up is definitely going to change. It's going to become more user-friendly, less fees, more decentralized in a way, although we know that they try to keep it as centralized as possible. But they don't have a choice. I mean, with the disruption coming in, you either have to figure out how am I going to exist in this new universe, or I'm going to completely disappear. So that's a lot of the things that we've been looking at is companies that's already doing things in that particular arena. That's now coming into the banking basically sphere and challenging that. You have companies in the crypto space that will be custodians, let's just say, of certain cryptocurrencies, but stable coins, earning a nice return for you that you can borrow and do the lending through them too. So I think it's going to change big time. And it's going to happen very, very quickly. But we're already seeing, like I said, mass adoption of certain banks already saying, we got to figure out a way to exist here. Let's get along in the sandbox, right? Which totally the other kids have climbed into.
Totally. So let's talk about your business now. What's going on? What are you excited about? What are your plans going forward? Where do you see your business going?
So the one business I have is called Producers Wealth. We help folks set up strategies, wealth strategies, an overall holistic strategy, and help them set up the infinite banking strategy, which is based on the insurance. That's completely virtual. We're doing business in 50 states. There was a company that I started in 2015. That again, folks were thinking I was crazy when I said, well, I'm going to start this virtual firm. Who goes on to Zoom and talk to people and sits down for a wealth strategy or consult, right? So that's the one company. We're very excited. We've got a great team, and more folks are starting to learn what we do and the power of that. So we help them with that. The other company is Cashflow Ninja, which is a education company, and our core principle and philosophy is we want to empower folks to become self-reliant through education. It was mostly focused just on money. There'll be some other things that we roll out too, besides sharing how to start a business, how to create a wealth strategy, how to create a portfolio, cash flow portfolio, how to invest in cash flow assets and so forth. Very excited about that part of it. The other side that I'm excited to as an investor, I've changed a lot in how I invest personally. So I used to do things myself, like that first property, and then I invested with partners, and now my thing that I'm most excited about is people finding the right operators in certain niches. And that's how essentially you can diversify into different areas. So instead of jumping headfirst into the self-storage arena or resorts or mobile home parks or multifamily, I find the best operators and look at how I can partner with them, invest in their projects, and look at other value that I can provide for them. So that's what I'm very excited about, because I think there's a lot of opportunity in certain niches. And, folks would ask me these days, like, what's your niche kind of that you're focusing on? And I said, my niche is people. I try and find the best people to partner with them. And because there's a lot of opportunities in different niches. So, and I've kind of taken that approach. I try to learn about the industry, about a specific niche and who the players are, who the best folks are, seek out mentors, learn more from them, and eventually end up partnering with them instead of doing things myself.
Super smart. And that's how you do more and not basically run yourself into the grave, because we only have so much time. Time is the one thing that you just can't get more of. When it's gone, right? Money you can get more of. You can get more time, but the way you multiply your time is to, like you said, look for people that can help you multiply your time a little bit. So I love that, man. I'm all about it. I have a partner in my business, and people ask me, it's crazy. Why are you, like for me, at least in my real estate business, we're 50-50 partners. It's not like a business partnership, but we're 50-50 partners. Like, man, you're giving away half of your profits. Like, yes, I am, but I'm getting half my time back, right? And so what can I do with half of that time? Whatever I want. I can spend it with family. I can invest in something else. I can focus on other things. So ultimately, that time multiplier is people, and I think that you're smart to do that. So that's awesome. And so if people want to find out more about you, what you're up to, what you're helping folks with, where can they go? Where should they go to find out more about MC if they want more?
Cashflowninja.com is our platform. They can go on to Cash. Everything is there, our podcast, our resources. And for folks interested in the banking strategies, I created a free video series that they can access at yourownbankingsystem.com.
Nice.
So yourownbankingsystem.com.
Got it. And we're going to put all that in the show notes, guys. So if you are driving, running on a treadmill, whatever you're doing, you can go to the show notes and check that out. MC, man, I appreciate you doing this. I really appreciate you being on the show. You're a lot of fun, super knowledgeable. The accent is cool as heck. I didn't get into it, but that's super cool. So thanks for doing this, and thanks for having me on your show again. I appreciate it. We did that a while back, and it was a lot of fun, I remember. So I was excited to have you on this one, and you delivered big time. So thank you, man.
Thank you so much for having me on. This has been a lot of fun.
Of course. All right, man. Have a good rest of your year. If I don't talk to you, success and happiness to you. And hopefully we'll talk to you in the future.
Same here. Same to you. Thank you.
Yep. Thanks. Bye-bye. All right. I hope you enjoyed that interview with MC. He's a fun guy, and I'm always intrigued and interested and really inspired by people who come from other countries and do such great things. I think that they just have that entrepreneurial fire a lot of times that some of us take for granted here. I did for a long time. I kind of grew up in a stable, sort of safe house environment, and it was tough for me to break out of that and think a little bit differently. And we talked about that, Steve Jobs, right? Like, the crazy people, the people who think outside the box and what they can achieve. And I think it's really, really inspiring. So if you're interested in what he had to say, go check out his stuff at Cashflow Ninja. And until next time, guys, listen, whether you're from this country or from another country, whether or not you had a lot of things growing up or didn't have a lot of things, it honestly doesn't matter. It does give you different tools and things that you have available, but we all have strengths. We all have a way to make it work. You just need to go out there and don't be denied. Those are the people who succeed always, in my opinion and in my experience, the people who refuse to be denied. Refuse to be denied. Get out there and get after it. All right, we'll see you next time. Okay. You're still there. You're still listening. That's awesome. And I really appreciate that. Now, hopefully it wasn't an accident. Hopefully you didn't leave the room and I'm just talking to an empty room right now. But assuming you're still there, I want to do something really, really cool for you. For a limited time, I want to give you a free digital download of my book, the entire book, Level Jumping. If you're a listener to the show, you know it just came out, and it really details how I took my business from being like one where I was just doing a few deals a month, maybe 1 or 2 deals a month, to doing over 10 and sometimes 15 deals a month and over 100 a year. And I went from doing very little profit to over $1 million in profit. And I made that transformation in a 12-month period. And this book talks about what I did, the steps I took to transform my business, and how you can too. So grab a free digital download, and you can get that by texting the words "just start" as 2 words now, "just start" to the number 55444. So text "just start" to 55444. I will send you a free digital download of my book. It's the complete book. There's nothing held back, and that'll be completely yours just for making it to the end of the show and listening to me. And I really, really appreciate it, guys. So I want to do something nice for you. I do this every once in a while at the end of shows, and if you listen to the very end, every once in a while, I do a giveaway like this. So hopefully you enjoy that. Go grab a free copy. I hope you read it. I hope you love it. Reach out, let me know what you think. All right, guys, talk to you next time.